follow along with the trade on bonds and Twitter, you had we showed you what we were doing, we showed you what to question, we showed you what to type in, we showed you what to do, and if you liked it, you've obviously taken it, haven't you? So we've got the lifestyle timetable here, and you can see the lifestyle timetable is this auction date here. This is when you've got to be at your screen for 6 o'clock London. Well, you've got to be at your screen for 5 to 6 London so that you're prepared and ready to play. And you can see obviously the ones we're looking for, not these bills. The bills we're not going to trade. But you're looking for the notes. So you're looking for the notes, preferably in the bonds. And anything that says notes or bonds, you're going to be paying very close attention to. Notes and bonds. And obviously you'll notice that there are several. You'll see that there's a 20-year bond that comes up in blue as well. And then there's notes. And then there's a 30-year bond. You can see there the 30-year bond. That was yesterday's trade. And as you know from the notes and bonds, we've done this trade live in Twitter for you if you wanted to follow along. So last night we went through the process with you. And we told you exactly what we would be wanting you to be prepared for. This is what it looks like here from the trade itself. You'll see that on bonds, this is at 5:30. So 5:30, we're 30 minutes before the auction. You'll see here bonds, the curve is still flattening, so I'm joining the dealer's book at the long side at the moment, right? So that's okay. We did that little bit of business, and then we move up to the trade here, which is now 5 minutes before the auction results, okay? So it's not the auction itself, it's 5 minutes before the auction takes place. So if you're going to be practicing along with us, get your stop orders queued up and ready to move. So you put a buy stop above, sell stop below, just before the auction. Not too close, you don't want to get taken in before the auction takes place because you still need to see what the auction results are. You move on, and then we are now at 5:59. We're 2 minutes before the auction results. They don't come out at 6, they come out just after 6, okay? So you don't have to worry about it, it's just after 6. So the next thing you'll see is that we're now checking the curve. Bond check your curve. Gap is small, rates cheap against the curve short term. If bonds were at a top line, we'd probably be looking at the sell trade as a better opportunity, but they're not. That's why I said if bonds were at the top line, they weren't. So you can see in the background here, the bond is not at the top line. If it was, you'd probably be looking to sell that anyway, but obviously that's not the case. So we've got a bit of space here to negotiate back towards 22.20s. And then what happens? And then you can see here at 5:59, I then tell you, bonds, next, get ready to write down the WI. Okay, so you're getting ready to write down the WI. That comes out the minute before the bond auction results. Okay, it comes out the minute before the bond auction results. So you write down the WI. Why do you write it down? Because you need to know that number. It's the most important number at this point. So I've then typed it out for you there at 6 o'clock. The WI is 463 basis points, 463. You can see it's posted here. You can see if you were to look at this, Treasury WI is 30-year is 463 basis points before the $25 billion auction. And the reason why you need to know that is because you've got to keep going over in your head the storyline. If the number's higher than 463, if the number's higher than 463, you've got to know what you're going to do. That means yields are higher. That means there was no demand, sell bonds. If the yields are higher than 463, if the high yield is higher than 463, sell bonds. Sell bonds higher than 463, sell bonds. You just need to remind yourself of one side so that when the data comes out, you're immediately looking at the number. If it's higher or lower, you know what to do. If it's lower, then you play. High yield of 460, so it's lower than 463. See that? 460, it's lower. Lower. 460, it's lower. So what does that tell you? It's showing a decent demand auction in line with my prior longs, and we trade it immediately. So you can see that we get taken in. Soon as we know what the number is, we try and get into the trade. Obviously, if you've got a buy stop order, you should be taken in anyway, and you get filled as quickly as you can. And then, of course, the results come out, And you see, obviously, there's the results coming out here. The high yield was 460, 460.8. The WI was 463. We generally, as a rule, count it to 3 decimal places. You're not going to be counting it to 2. You're always counting it to 3. So you're basically looking at that and saying it's a 22-point stop through. A 22-point stop through is a solid auction, and we should expect to see a sizable upside buy side pop on this. So when we know it's a solid buy side pop on this, we're ready to play that solid buy side pop, and we should see a lot of follow through from that price point.